All right, I'm here with Ed Guimaraes, CFO of Sierra Metals, a polymetallic miner based in Toronto. Ed, thanks for having us in today.
Thanks for coming.
So you guys have 3 operating mines, one in Peru, 2 in Mexico, silver, copper, and zinc being the primary metals from there. Over the last few years, 4 years plus, you guys have been investing heavily. Do you want to talk to investors about what that investment's been?
We've spent approximately $200 million over the last 4.5, 5 years, and we've done it all with operating cash flow, which is nice. No debt, no equity, so very positive.
That's kind of what you want to see. That's the definition of a sustainable mine, right?
That's correct.
And so you guys have ramped production capacities pretty substantially, but more excitingly, Q3 results, you're kind of signaling that period of investment's coming to a close. Do you want to give some highlights of those Q3 results?
Well, we had record quarterly consolidated production, and that was led mostly out of Bolivar and Cusi, where they had record throughput.
And then positive free cash flow at all 3 mines.
Positive free cash flow at all 3 mines, and that was the first time Cusi has seen positive free cash flow. So that's exciting.
Yeah, absolutely. And obviously investors thought it was exciting as well. Stock climbed 12% the day earnings was released. So can they expect more of the same, more improvements? What's the near-term future look like?
Yes, I believe they can. The major capital investments have been made, and as we hit our plant throughput targets, we should see our unit costs come down, and we're expecting better grades at both Bolivar and Cusi, and at Cusi more consistent grades.
Excellent, and that should help sort of, I believe you said on the conference call, adjusted EBITDA target of about 50% from where you are now. You see that achievable in 2020 as you bring down those unit costs?
Yeah, that's the goal, and I don't see why we can't get close to that, if not
exceed that. Yeah,
exactly.
Excellent. And you guys have been achieving, I would say, pretty solid success rate here with some tough macro headwinds, and I think part of that's been due to a switch from where you were a couple of years ago. You brought on new mines, and now your revenues are being split differently between the metals. You talk to investors about that change and how it gives you stability in sort of tough pricing environments with different metals.
We've been seeing that zinc, which used to be our primary metal, that's come down. Copper is leading the way. I think the future looks bright for copper in terms of the macro fundamentals that we're seeing. And with Bolivar coming on strong, we expect copper it won't hit 50% next year, but it's going to be close. So we're becoming more of a copper store.
Are you going to move away? Flagship is Yuricocha. Is Bolivar going to take over?
Not yet, but it has the potential in a couple of years that it could knock Yuricocha off the podium.
Oh, that's excellent. That's always a good problem to have. The 2 children vying for top spot, right?
Right.
So looking on a mine by mine basis, Yuricocha, 3,150 tons per day for 2019. You're looking to take that up to 3,600 tons per day. What needs to happen to see that change?
Right. So we've got the EIA approved already for that change. We're just waiting for the last of the tailings permits, and we should have those in the coming weeks, if not month. And then we'll move to 3,600 tons per day. And
excellent.
We're already we averaged 3,500 tons for the quarter, so we're pretty much there.
That's perfect. So tailings dam gets put in, and then you guys have already demonstrated your capacity, the mine capacity to actually operate at these higher throughputs with no challenges, good economics. It's a fantastic sign for the future of Yuricocha. He's not going to give its crown up to Bolivar without a fight, right?
Right.
And then at Bolivar, you've moved 3,000 to 4,000, 2018, 2019.
Right.
2019, 2020, 5,000, so another 1,000 tons per day. What are you expecting financially from Bolivar, and any kind of changes that need to be made or have already been made?
Right. Well, we're expecting our grades to improve slightly next year, but going forward, as we move west into these new zones, Bolivar West and Bolivar Northwest, we're expecting a higher contribution from precious metals, and we're expecting grades to lead the way there. And getting to 5,000 tons per day, we're expecting those unit costs to come down. So
excellent, because you've already made the mine improvements. And
that's correct. Now it's just getting our throughput to where it needs to be.
Excellent. And so for looking at the third mine, Cusi, silver mine in Mexico, you went 650 all the way up to 1,200. It's almost a doubling, basically. Right. You're not quite at that 1,200 yet. Where are you guys now? Mid-November.
We're just we're at 1,000 tons and just getting there, and we'll be at 1,200 by the end of the year. So.
Excellent. Yeah, because at last quarter I think it was 805 tons per day.
That's
for
correct.
the quarter, and now you guys are already kind of moving past that. tracking towards your target. There's been some challenges there over the last little bit with some subsidence issues, but you guys have brought new contractors on site. You've made some improvements. Can you talk to investors a little bit about why you think improvements are in the near future for Cusi?
Yeah, I think you'll see more consistency coming out of Cusi now as we move into 2020. We'll get a higher grade that we're expecting and slightly improved recoveries. And we think at 1,200 tons, it shouldn't be a problem.
Right, unit costs come down.
Coming down, exactly.
Excellent.
Exactly.
And so looking forward, 343-101 is coming, all 3 mines, 2 in December, Yaracocha and Bolivar. Those are more updates. And then your Cusi in Q2 of 2020, which is, I think, a bit more of a substantial one. Can you talk to investors a little bit about what to expect from those?
I think with Bolivar and Yaracocha, you're going to see an improved quality in the reserve resource. I don't think you're going to see big reserve increases by any means. You never know. We'll leave it at that. But in Cusi, it's because it will be the maiden reserve. We're excited about that.
Yeah, that's a very exciting time. And obviously, you're entering free cash flow generation phase. $40 million on the balance sheet. That's like a CFO's dream, I feel, at least in the mining industry. So what can investors expect? Are we talking dividends, M&A? What's on the table?
I think all of the above are on the table. We're looking at all options right now, and it's exciting. It's an exciting place to be, given where metal prices are. But brownfield organic growth will continue to.
That's where you see the best return.
That's right. I think that has to be the priority. But we're not going to discount the possibility.
M&A, dividends.
M&A. We have been looking at M&A.
Yeah.
We've been kicking some tires, doing some due diligence. But we would probably consider there could be dividends and a larger share buyback.
Right.
Could be an alternative. And then a couple of years out, more bigger possible M&A add-ons.
Well, those are exciting times for Sierra investors. Thank you very much for taking the time to chat.
Thanks, Evan.